All right. Hey, good morning. It's right at 7:30, so let's jump right in and get started. Appreciate you joining live today. I know it's busy. Everyone's trying to get in the field and get a lot done. So we'll jump right in and try to maximize your time. Before we get too deep into the weeds, I'll go ahead and jump to the conclusion for everybody here, though. The conclusion is that from last Wednesday to today, on April 27th, I see no change in fundamentals, no reason to change any marketing plans, and no reason to take any significant action. There's just been no new supply that's been created. There's been no demand destruction that we can identify, and so I don't see any reason to do anything other than look up. So let's talk a little bit about spreads and where we think the action is going to be. There's lots of commentators talking about just new crop corn. It's got to go higher. And then in the next breath, they'll say, but we're selling old crop corn and we're going to bear spread it because we think that that the old crop has plenty of supply. Well, I really want to think that through, because if they're right, then this whole bubble is about to burst. Now, we've talked about this for a long time, that we thought that even with war in Ukraine, that somewhere in the April, May, June timeframe, so somewhere in the current time frame to the next 6 to 8 weeks, we could top this thing out. And our logic has been that if Ukraine is 1 billion bushels of corn and that supply disappears, then other growing regions have to ramp up supply in order to offset it. And we grow enough and South America grows enough that if we both just have a small marginal increase in supply, that we can fill that void and replenish those bushels. So I think it's a safe assumption that the world can respond and fill the hole that's left in Ukraine if they're unable to export anything into the world market. I think that we have the capacity to absorb that loss. So let's just start. Let's kind of take that as an assumption. But in order to do that, we have to have two things. We have to have the acreage planted, and we have to have the weather sufficient to grow high yields. So that leaves the question and the uncertainty as to whether or not that's known. And the same is true in South America. They have to have the weather and the acreage planted in order to make that work. So I want to show you what's happening in South America, okay? So this is Brazil, and we're going to focus in on here because this is Mato Grosso. This is the region right here that's responsible for growing most of the safrinha corn crop. Now we know that the USDA is telling us that South America is going to grow a huge crop. And it's a little bit tricky because they grow two of them, right? They grow a first crop and then they grow a second crop, which is what they're growing right now. And we know that the first crop was a train wreck. We know that they were somewhere between 600 million and 1 billion bushels light on their first crop. But the USDA really hasn't adjusted their numbers because they're saying, well, hey, if the weather's good and they plant the acreage, then they're going to outgrow that shortfall. Are you with me? Same thing we just said about Ukraine. There's enough capacity here to outgrow it. But this is the current forecast. It has not been raining. It's not scheduled to be raining. And the temperature is hot and dry. So you're coming out of their rainy season into their dry season with corn pollinating with no rain and extreme heat. So somewhere along the way here, the corn market should respond to that and recognize that the supply situation may not have solved itself. In fact, it may have done the opposite and gone worse. So what do we have to do to propel ourselves from $8 to $9 or $9.50 or maybe higher? Well, we have to decrease supply further, right? because here we are. We've been talking about demand destruction in the corn market for a really long time, in excess of 12 months. We've talked about demand destruction all the way up, and we've said, well, $6 corn, you should sell it because we're going to slow down demand. Well, that hasn't happened. $7 corn, same thing. And now here we are, and demand still has not slowed down. In fact, we continue to see margin expansion. The soybean crush margin is getting wider, and so is the ethanol margin, even though it took a downtick. So we're coming into our heavy driving season. We have more instability on the geopolitical front, which is bullish oil, not bearish. And you have the government continuing to print money and subsidize. So there's been nothing that would warrant us to say, hey, this move is done. Now, technically, what do we have? Well, we're clearly in an uptrend, right? I mean, you can see that there's nobody that will dispute that that's an uptrend. So we have this little correction, and then we have a rally back to right near the highs. So some are out there saying, oh, that's going to double top, and we're going to reverse it and go lower. Now, rewind to last week on what we talked about. What are we looking for in order to see a bearish setup or something that would cause us enough concern to warrant selling this thing? Well, we said it would need to exceed the 38.2 to 61.8% retracement of this last move. And we haven't even gotten close to it, right? So no damage done on this chart whatsoever. We also talked about how we wanted to give up the top of the daily cloud. Hasn't happened, not even close. So this consolidation period that we now have, which is overlapping and sloppy and choppy, what do we know about consolidation? It almost always favors continuation. If you've learned nothing from us over the last year and a half on this uptrend, it's that consolidation generally favors continuation. It doesn't have to, it's not guaranteed, but the odds are that trend is going to continue on up to new highs. Now, if I were to zoom in on this and get more granular, which I'm not going to do, into the shorter term structures, I think what you'd see is that this move is incomplete and probably getting ready to thrust higher. And if you add that to the severity of South America, to the continued instability in the Ukraine, and the continued demand and margin expansion we're seeing across every demand source, you'd say, yeah, we got to go higher. Which brings me right back to the whole spread thing. Is July corn the place to be in, or do we need to be in December? Well, if we're here because we're at fair value and we haven't rationed, and we're looking for new crop supplies to be the ones to be the saving grace where we overwhelm the market, then it would follow that you have to make sure that you have enough on hand to get to that next spot. And I think this is where a lot of traders are really confused, because in normal circumstances, the way you ensure you have enough supply to get the new crop is that you put a carry in the market, you bid December up and the front months fall, and you are able to carry it. But if you really think about it, we're so tight here, even with, quote, the adequate supply of bushels USDA says we have. We're so tight globally that there's no way we could possibly carry enough corn into next year in order to meet all the demand that we have. There is no way to do it. There's not the bushels that are present. In fact, it takes like a 3% decrease in acreage or yield in order for us to turn our balance sheet negative. We're looking at somewhere between $1.2 billion or less at current grind rates and current usage, and that's with an all-time record yield by 4 bushel an acre of 181. So the concept that we need to put carry in the market because we're going to be able to overwhelm it, guys. If we lose 5 bushel an acre, that is That is so many bushels, we're negative, and that would be the third largest yield we've ever had. So it's not possible to do it. There's only one other way to ensure supply moving forward, and that's to ration it and shut off the spigot and make people not use it at all. And you have to do that in the front month. So I think that when we do explode, I think it's in the front. I don't think it's in the back. Yes, the back goes higher. No, I don't think there's price risk. But I think logically, as people really dive into where we're at, I think we got to go much, much higher, which is why we've actually seen the July D spread gain about 30 cents over the last couple of weeks. So I think that's going to continue. I don't know where that spread stops. I don't know how high we have to go in order to turn off the spigot and make people stop using corn. I don't know, but it's not $8 because we haven't slowed anything down yet. All right, so now let's talk about soybeans. I do want to get a little bit more granular on soybeans because this chart can look maybe a little bit daunting and scary because we have this big day right here, which was Friday. Okay, Friday broke out to a new high. It failed to reach the all-time or the contract high in July, and then it turned around and it reversed and it ripped all these closes and these full body days out. That's a big ugly day, no question about it. So we put out a video talking about, I think we did this Monday, talking about this little reversal. And okay, so we have a big bad day. We got a little bit of follow through and extension. Is this a reversal pattern with completed structures that we're going to turn around and roll over and die from? And when we drilled into that, our answer was no. So I'm going to do that now. And I'm going to clean this chart up a little bit. I'm going to take our cloud off of it so that we're left to just to look at our wave structure. So this is just the move from the beginning of April through today, okay? So this is 1561, and here we are trading at 1683. So we're clearly in an uptrend. And for those of you that didn't watch the video, what we talked about is trying to identify whether or not this is a pure reversal or whether it's corrective. And we said that if it's corrective, it should meet a couple of requirements. One would be that it's overlapping, sloppy, and choppy. And you can see that it started off pretty steep, but since then we've done nothing but kind of chop to the side. The next thing that we want to talk about is retracement. How much of this advance did this actually take away? Because if it's above 61.8%, we're really not very worried about it because that's just a pretty normal Fibonacci pullback. And then last, when you're dealing with Fibonacci retracements amid big impulsive structures, a lot of times the 4 and 2 waves will flip-flop. One will take a 38.2% retracement and the other one will be deeper. So if 2 is 61.8, you might expect 4 to be 38.2 and vice versa. So what did these end up doing? Well, if we snap here, and I know if you watch this video, this is redundant, but it's okay, I think it's worth it. When we snap from the beginning of the wave to wave 1 and we move back to 2, perfect 38.2% retracement. So now what about wave 4? How much of wave 3 did that retrace? Well, we retraced just above 61.8%, and we haven't turned over and roll over yet. So what do we still think is the most likely next move? We think it's higher. This morning we have oil up a little bit. We have palm oil exploding. You have countries rationing their supply of palm oil, of just saying, hey, we're and all veg oils saying, hey, we're just not going to export anything at all because they're in such tight demand. So now let's talk about the bearish argument. Why did this break happen, and where do we go, and what's driving it? And really, that's tied to acreage and planting. So it's been cold and wet and nasty, and guys are having trouble getting in the field in some of the key growing areas. So the logic is that, well, they're going to plant less corn and they're going to move those acres to soybeans. And so therefore that's bearish soybeans and bullish corn. I don't think so. I don't think that's accurate at all for a couple reasons. One, what did 2018 teach us, or maybe it was 19, can't remember which one it was, but the year that it rained and we didn't plant very much, we couldn't get going, couldn't get in the field, and we ended up planting, I think it was 40 million acres of corn after June 15th. I mean, it was an insane number. And then according to the USDA, we had no trouble growing it because we ended up growing a record crop. So with our planting technology, the pace of planting, the knowledge that we can plant late and not hurt a crop, you know, I don't know why people think that that's going to shift acres, because I don't think guys are going to change the rotation at all based on that. I think they're just going to keep planting it. So I don't think that that's bearish beans. And then the second piece is that, remember back here, this is March 31, remember what happened. The USDA told us that we had 3 million more acres of beans than the market thought that we had. And we've absorbed that information. We've rallied right back up the peak of it. And now we've fallen right back to and found support at it and reversed from it and are trading higher now. So I think that that's really a significant level, because we're still holding above that giant supply shock. So when you look at those two things together, I think you got to realize that beans are probably going higher, not lower. And I think you've got to realize that corn's going higher, not lower, based on just the total situation that we've got. So now what about wheat? Everybody loves wheat, right? Like, hey, we've got really good prices, but we're consolidating. And so what is happening? Well, if the war were to end today, wheat's going to go lower. And wheat's going to go much lower. It'll probably fall at least back into this $9 to $7.50 to $9 range, right into here. I don't think that this will support it, because if the war ends, then that puts 40% of the world's wheat supply back into play and available for export. And so clearly that would be bearish prices. But here's the thing, is that the war is not getting better. It's actually getting worse, and it's continuing to deepen. So Russia is digging their heels in. The rest of the world is strengthening their posture, trying to kind of scare Russia into submission. But we've been talking about this. Russia controls, if they get Ukraine, Russia controls 40% of global caloric intake, and they control a third of the world's energy supply. And they have very little debt relative to other nations. So why would they stop? Why would they do anything other than finish what they started and take what they want? Because it puts Putin in such a powerful global position. So I think that wheat is more bullish than bearish. I think that if you look at the short-term structure, which I don't have time to do, I think that this is very similar to soybeans, where from the low that we scored in late March, this is a 1-2. And I think that we may retrace a little bit deeper down here, but I would expect that $11 number to hold before we rocket higher and slice up to new highs. So even with wheat, even at 11.50, my recommendation and thought process is too early, not ready to sell it, because, by the way, not only is 40% of the world's wheat supply off the table currently, we have the worst ratings and conditions that we've ever had in our U.S. wheat crop. So we have the fewest acres that we've had in like 107 years. We're as in bad a shape as we've ever been. So I wouldn't want to get too aggressive on selling this thing. We made a sale right in here just to protect that 1090 level, $11, but that's it. And I think we're just going to sit tight and let the rest ride. Now let's talk about basis for a minute with the minute that I've got left. I think that if we're right, we're selling really high basis levels all over Kansas and all over Nebraska. That's not an indication that old crop supply is plentiful and that we don't, and that we have enough. That's an indication that we're tight. And so as the rest of the world absorbs the fact that the safrinha crop is suffering, and they're going to come here and look at us, and they're going to look at us in wheat, they're going to look at us in corn, and they're going to look at us in soybeans. And I don't think that that's bearish in any way for our basis levels. So I think we need to just sit tight, let the market continue to work, and keep reevaluating it every day and every week until we see something meaningful change our outlook. All right, that's a lot of information, and that's a lot of talking and words, but I hope it's helpful. Remember, there is significant risk in trading commodity futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great week. Please call us if you have questions. We would love to work through any issues that you're dealing with. We will talk to you next week.